what are your views on investors who say we'll wait till after the elections, we'll wait to see if Trump wins the US elections, we'll wait until we see South African economic growth numbers revised upwards before we contemplate investing in A, B or C? Is there any harm in taking such a precautious approach?
Well, taking such a precautious approach is forecasting, and we believe that there is little reward for forecasting, and one often gets it wrong. So we recently did a study to say, well, what if the investor does try and forecast? And if we look historically, and we said, if we look at an investor that invested at the best exact time every year, what would his performance be versus an investor who was horrible at forecasting and always invested at the worst possible time in the stock market, what would the outcome be? And we found that there was very little difference between the two investors. And that's why we often say to clients and investors, it's time in the market as opposed to trying to time the market that is important. So to clients that are trying to time the market or wait for things to happen, our advice is just get invested. You can't forecast these things. You often get it wrong, and the best place to be is invested.
But then I suppose, for people who are perhaps novices, but they're interested in listening to what's happening in the market space, they've heard about Steinhoff, they've heard about EOH, they've heard about these companies that were the darlings of the market that have lost massive value, and some people can't even quite put their finger on it. What do you say to them? Because no doubt that creates a lot of apprehension.
It does. Obviously it is concerning when we have these companies perform really badly, and it does have an effect. Our belief is to diversify so that when these things do happen, it doesn't have a major impact on your investment. So diversification is the best thing you can do to try and avoid these instances of company failure that can really hurt portfolio performance.
If trying to time the market seems to be a futile exercise, as you've said, what then has to inform an investor's approach to investing? In other words, say you have a hypothetical individual who's got 100,000 Rand at his or her disposal right now under current local and global dynamics. What asset classes, and especially in equities, what sort of sectors should they be investing in?
So, I think the number one thing about this futile market timing is definitely, if you're going to be invested in the JSE or equities, you need to have a long-term investment horizon. So we're assuming more than 5 years, ideally 7 to 10 years. And then you just want to get in. You just want to get in and get invested. And then when you're investing in the equity market, we believe in diversified portfolios. We won't necessarily put all our eggs in one basket in financials or industrials or resources, but rather a diversified basket of shares within those various sectors, so that you aren't duplicating risks. You have uncorrelated assets within the portfolio, and that tends to perform well over time.
So one of the things that investors try to do is obviously, like you say, forecast and look at the future. Right now, we keep on hearing, fourth industrial revolution. Are there any sectors where perhaps, they haven't had much attention, where people should begin investing now so that they can reap the benefit of the time when the fourth industrial revolution is really running full swing?
So, the fourth industrial revolution is obviously a buzzword, and we've seen a lot of ETFs and that's trying to play on that theme at the moment. There's a few companies that are unheard of that also are play on fourth industrial revolution, ones that they are often smaller companies, so less liquid, so it's not necessarily where you want to invest in this and put all your eggs into this one investment, but rather a portion of your portfolio, for example, could be in a company like Etienne, which is previously Ansys, and they basically are an engineering firm that deals with technology and tries to give a play on this fourth industrial revolution. But we don't necessarily invest for these thematic views. We believe we don't forecast, and obviously that's just pie in the sky stuff for now. We prefer to look at companies for their current valuation and look for attractively priced companies that are good businesses, and that's we invest in established, well-run businesses that are trading at really good multiples, and that's the kind of businesses that we're looking for. We're not looking for these businesses that are future growth. It looks grand, but you're uncertain whether they will actually achieve that.
Yeah. Going back to the top of our conversation. Say, for example, a client approaches you, instead of just sending you an instruction, please sell off all my portfolio, but they come to you to consult and say, look, I am worried about the picture right now with everything that's going on. And your advice would obviously be plod on, stay invested, stay diversified. But what advice do you then give to someone who's got a portfolio but is really worried about one or two stocks that really seem to be falling heavily, and there doesn't look like there's going to be much of a return or bounce back? What's your advice there?
So, I mean, a lot of our job is exactly that, advising clients and trying to educate them on staying invested and keeping with the initial objective that was set when constructing that portfolio. And often clients see shares selling off, or they see these headlines on shares and then they see it in their portfolio and they're very concerned. And as you say, they email regarding those shares. I think it's up to the investment manager to make sure that their investment case in those particular companies still stand. And if the fundamentals with that company is still in place, share price is really out of our control. We can't control what the share price does. All we basically want to make sure is that the fundamentals are still intact, the investment case is still intact, and that, I mean, that's all we can really advise the underlying client.
That was Samantha Steyn. She's Chief Investment Officer at Cannon Asset Managers.